All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto market. Okay, guys, so Bitcoin is getting a little bit of a relief bounce today after seeing that devastating crash yesterday. And I am still concerned of lower prices. First of all, this bounce that we're seeing so far today is kind of a weak bounce to the upside. If we turn on our volume here, you can see that volume is still kind of lower than the dump. Decent volume, but not the best. If we zoom in on the hourly chart, you can see really the volume was coming in towards the end of the move. And I guess towards the end of this push up, we're seeing a little bit of increased volume here, but it's not looking the most strong to me. And I do think that we could see this roll over and continue to dump. Now, earlier today in my Telegram community, I talked about maybe getting that potential rise up to backtest the channel breakdown in confluence with that anchored VWAP, that 74K key high time frame anchored VWAP before seeing another roll down. If we do rise that high, it will invalidate a potential impulse to the downside, a 5-wave impulse to the downside. And I am still looking at a bigger impulse to the downside from those 116K, 116.5K rejection area. If I zoom out on the chart here, let's just go to the 4-hour chart. And what I'm looking at, a couple potential scenarios. If we're going to see a sharp zigzag correction to the downside here, a 3-wave zigzag correction into our POC, where then we want to really start to impulse up out of here. First of all, we have not hit the target, the most common target area for that zigzag correction. If we turn on our 1-to-1 to our 1.236 Fibonacci extension, taking it from the highs to the lows of a potential A wave or X wave up to the lower highs here, and we look at that trend-based Fibonacci extension, you can see here that the target, the most common target area, is between the 1-to-1 and the 1.236. And both those levels have confluence relatively close by that is very, very much at play here. So some nice confluence. And of course, if we're going to see that bigger ABC, we want to see the impulse down in here, a 5-wave impulse. And we can count a double 1-2 impulse to the downside in this guy here. You want to see that 3-wave correction to the upside, and then you want to see another 5-wave impulse to the downside. So we could still be in this 5-wave impulse to the downside from the rejection here on Sunday, on Sunday's highs when we rejected from our range POC, our small 3-week long range POC. And if we're looking at this being a unfinished 5-wave impulse to the downside, then we want to reject from our wave 3 target area, our wave 4 retracement area, I should say. So we're going to look at our third wave down, which was our wave down from Sunday to yesterday's lows. We're going to pull that Fibonacci extension, and we're going to go from the highs of your third wave to the lows of your third wave. And your targets are between the 382 and the 0.5 Fibonacci. And you can see coming up just a little bit higher to that 105K area, it would, if I now zoom in on the 1-hour time frame, it would be a little nice internal liquidity grab of this candle here, which was, we do have a bit of a fair value gap with inside this candle. You can see that kind of fair value gap that is right in here. And so if we took out that fair value gap, actually it looks like we have taken out that fair value gap. That's where we got the rejection from the fair value gap fill. But if we come just a little bit higher and sweep that liquidity that's just above into that 0.5 Fibonacci, then that could give us that nice final push to the downside where we actually come take out our 98.3K lows, and that 5th wave could even bring us all the way down to our POC or our 1-to-1 target. For below us, now, if the low is put in yesterday, which I think is highly unlikely, I do think we are going to come take new lows just based off of what we're seeing on our oscillators. There's no, if this was going to be a major reversal low, we would expect to see some intermediate time frame bull divs and some low time frame bull divs as we were coming into this low here. And it would be at a nice support level. The only thing we had here, we did have a naked daily point of control. Let me go ahead and turn those on, and we will see. I'm not sure if it's going to go back that far, but we did have a naked daily point of control down there, bounce from that area. But if we're going to continue to see this 5-wave impulse play out, then really I'm looking to come take out the lows. And I don't think this was the actual reversal low, the lows of this entire move down because of our lack of bull divs on the chart. First of all, you can see money flow on the 4 hours still looking kind of bearish here. NAMI 4-hour money flow is starting to roll over and dip back down again. We did get the red dot on and the momentum wave topping out on the 4-hour. And if we zoom into like the 1 hour time frame, as we were coming down into this low, we weren't seeing any bull divs here. No bull divs. Money flow looked really bearish. No bull divs on NAMI, which is quicker. And money flow was, I guess, neutral in this area. So for me, there was not enough confirmation to look for a long at this low here. And I just don't see this being the actual low of that bigger dump. I do think we are going to continue to the downside. Now, if I pull that, instead of looking at our wave 4 targets between the 382 and the 0.5, our invalidation for the impulse continuing to the downside is hitting that golden pocket. And that golden pocket does happen to be right in our zone of resistance that I was looking at this morning, really between the anchored VWAP. Let me put that there. It's going to be a golden pocket. It's going to be the bearish backtest of our large channel breakdown, and it's going to be our key anchored VWAP from those 74K lows. Now, if we do hit that golden pocket, it will invalidate this move down from last Sunday as a 5-wave impulse. If we hit that, we can no longer consider it a 5-wave impulse. But it doesn't mean that we can't reject from there and make new lows. We would just have to be looking at a more complex correction, maybe a double zigzag correction somewhere in here, or some sort of flat correction to end this. But I do think higher probability that we are going to come make new lows, and we're going to actually tap in to some really key levels below us. So a lot of the times in my videos and my live streams, I emphasize to you guys that the most important levels of support and resistance on the chart, or the things that run this market, are volume and liquidity. First and foremost, it's liquidity. And second, it's volume levels. And you can see we have a major liquidity level, a major swing failure pattern low, a swing low that was front run yesterday on the low. And I just do not see the market makers dropping all the way from all-time highs, coming down sub 100K and leaving that liquidity intact from this impulse to the upside here. So I do think we are more likely to continue pushing down here. Also, if we zoom out onto some of our higher timeframes, onto our daily level, daily money flow is crossed over into the red on both NAMI and Market Cipher B, and we have invalidated potential bullish divs that we could be seeing on both NAMI and Market Cipher B. So to me, that is a sign that we are not making a major low here, that we are just seeing a little bit of a dead cat bounce or relief rally before continuing the push down, the overall push down. Now, I would like to say that the last couple of days, I've really been warning about this anchored VWAP from 74K. So this anchored VWAP from 74K, if we wanted to maintain our bullish trend, our overall bullish sentiment, and keep making new all-time highs, we really wanted to stay above that anchored VWAP if we came down to test it, which we did the last couple of weeks. We were testing it over and over and over again, and I kept saying in the live streams and the videos, guys, every time we hit into this anchored VWAP, it's getting weaker and weaker and weaker, like punching holes through a piece of paper. And eventually it's going to break and fail. And that's what happened yesterday. So for me, now that we have lost that level and we have closed multiple daily candles below that level, it is going to be acting as a key resistance for us. And oftentimes, after bouncing from a support level, we will get that rise up to bearishly backtest that area. And if we do reject from that area, we can expect the downtrend to continue. We could come up and test it right now with yesterday's low, could be the low. We could rise up to 107K. It's between 107 and 107.5K where our big resistance is there. And if we look at, it's also the value area low of our range that we broke down of the last couple of weeks. And if we even kind of pull this range and look at this upper range in here, I guess, okay, value area low is a little bit higher on that. Let's actually bring it right there. Yeah, the value area low of this upper range is in that general area. So, and you can see that's also where the back test of our large channel is. And so let me clean up this chart a bit and I will talk to you guys about this channel. This channel I showed in yesterday's live stream, and for me it was really it's a key channel because it's just a trend. And from the lows in 2024, our 2024 range lows, these range lows in 2024 of that 8-month range, If you take those lows and you bring it to your next key higher low, which was those 74K lows, you get the trend. You get your momentum trend for this year so far. And of course, I brought the channel to the highs, the all-time highs in 2024. And that's where we developed this channel. You can see there's been really nice respect of the midline of the channel, multiple times of the midline rejection here. So the channel is being respected. And the second we really started losing that channel yesterday, let me kind of clean this up here and I will show you. And I did show this in yesterday's live stream, but the second we started losing that channel is when we got the big aggressive dump yesterday. So if I zoom in on the 4-hour chart, we really started to lose that channel, and that's kind of when we started this waterfall to the downside. And anytime you lose a channel like that, you will bounce from a local support level and oftentimes have a back test of that trend. And if you do reject on the back test, you can expect new lows. If you can actually get back inside of that channel, then we could actually classify that as pretty bullish, that this was a deviation to maybe stop out some traders to get everyone in fear. And now the market is going to reverse and we're most likely going to impulse up out of this thing and actually probably come take out our range highs around 116K. So just want you guys to be aware that is a major level for me that I'm going to be watching, a major resistance level. It is not even guaranteed that we make it up to that level because remember, our wave 4 targets for this potential impulse to the downside from last Sunday, a wave 1, wave 2, wave 3, a wave 4 is at about 105K, where we do have that 0.5 Fibonacci. So 105K is another smaller level where I'll be looking for a potential rejection and rollover to finally come take the liquidity at 98K and finally come down and hit our large range point of control, which is the thing that I'm watching most, is that large range point of control. So let me go ahead and turn on that macro range. Now I'll pull this to present day price action. We were looking around at some stuff with this yesterday. But if we look at that large range point of control and we look at our price action, since we've broken above that point of control, what was that at the beginning of May, the first week of May in here, we have not back tested it yet. And generally, if you do break above that point of control, you'll see an immediate time for immediate back test, and then you'll generally get a higher back test before continuing to push up. We got neither of those. And after seeing this kind of failed auction type price action above the breakout of the value area high, now that we have reestablished price action back inside of our volume profile, we can assume that now we're going to finally come in for a large time frame bullish back test, of that POC. And if it does hold, then we might be able to continue pushing up at least up to the value area high of the range to retest that value area high now as resistance again. So 96.5, 96.6 is kind of, on Coinbase, it's between 96.6 and 96.5. And then just below that is our one-to-one target at 95.4. So that general area is a nice area of support for me in this area here. And then, of course, I talked about this in yesterday's live stream, but if we do lose that POC, just below that POC, we do have some nice support. If we turn on that high time frame golden pocket, I'm just going to zoom out to the 12-hour chart. And if we look at the golden pocket from our 74K lows to our all-time high, you can see that that golden pocket is coming in around, and let me make sure this is where it's supposed to be there. That golden pocket is coming in around 94 to 92.5K. And to me, this is a very key support level as well, because it's the value area low of our range, our 2025 price action range, in confluence with a high, value area low in confluence with a high time frame golden pocket. And then also our anchored VWAP from the 49K lows, our last major weekly low is in that general area right below that. And by the time we get down there, it could be very, very close to that 92.5 area. If we're going to see another low in this impulse, bounce from that POC, come down and finally hit that value area low, by the time we get there, we could see that anchored VWAP be in perfect confluence. And once again, it would just be a value area rotation. We tried to break out of the value area high. We got stuck back underneath it. Once you get stuck back underneath it, you can assume you're going to test that POC. If you lose the POC, you can assume you're going to fill the range and test the value area low. So that is kind of what I'm watching for over the next days to weeks here. it is possible that we continue ranging. And also, when we come down to this POC, we might not see a V-shaped recovery. We have this 5-wave impulse, 1, 2, 3, 4, 5, potential 5-wave impulse. And then we might start to range in here for a bit and let the market decide whether they're willing to buy Bitcoin at fair value. Because for the last year, for the last year of price action, the absolute fair value for Bitcoin is now around 96.5K, 96.6K. So if the market is truly bullish overall long-term on Bitcoin, big players will be willing to step in and buy at fair value. Just like if you saw a nice watch that you wanted to buy at a watch store and a jewelry store, and you really like that watch and you thought it was fairly priced in value, you would be willing to buy it because you think it's maybe going to appreciate in value in the future, and it's something that you want to own. So that is what I'm going to be looking at now. With the push down that we're seeing so far, I have to say, the lack of bull divs that we're seeing on the chart and the front run of the swing failure pattern of 98.2K is concerning to me. Anytime you have an aggressive move down and you front run a swing failure pattern, a liquidity level, you get a small rise. The next time you come down there, it's less likely that you get the confirmed SFP, but you drop a little bit more, and you might see some sort of what's called a failed auction instead, where you don't SFP on a 1 hour or 4 hour candle, but you come down a bit lower than you expect, and you start to form a range in here for a bit, and then you get above it, and that's considered a failed auction. A failed auction. So that is kind of what I'm looking at for Bitcoin. Now let's go ahead and look at our liquidity heat map real quick. You can see with our 24-hour time frame after the lows yesterday, we do have some local liquidity that's sitting around 100.5K. We would take out that liquidity, and let's zoom in on the charts here. Moving in onto the hourly chart, with the move up that we've seen so far, if we pull our golden pocket from the lows to the highs, you can see that golden pocket is coming in right around that liquidity. It's a little bit above that liquidity. And we also have these internal lows from yesterday into that golden pocket. So some very small liquidity into that golden pocket. The only way I'm really looking to take a long off of this, I first of all, it's risky for me to take a long off that. But if this was the low, and we are going to come back down and bounce between the golden pocket and the 786, then that's kind of our last hope for Bitcoin, that the low that we put in yesterday is going to be a bigger low, and that we are going to push up above 107, 108K and start to get back within our trend, our bullish trend. So that's what I'm looking at for Bitcoin. If we zoom out onto the heat map and we look at higher time frames, if we go to the past 6 months of price action here, you can see that a lot of the liquidity is below us, and it's quite a ways below us into the mid 80s, coming down even into the low 80s. And now that we are seeing high time frame candle closes below our key volume weighted trend, being that anchored VWAP, we might suspect that this downtrend is going to continue to the next high time frame anchored VWAP, which is going to be running in around 91 to 92K, where we have other confluence of support. Other than that, guys, there's not too much else. We do obviously, now we're on the daily time frame. You can see we do have a new daily level that just confirmed about 15 minutes ago, 15 minutes ago. So new daily level at 101,500, 101,468 there. That is, let's zoom in back to the hourly again. That is close to your golden pocket. I mean, let's pull that golden pocket again, and you can see the golden pocket's a little bit underneath it, but what I'm seeing here locally, as far as very local support levels, there's not a lot of good confluence in here, because if we come down and bounce from the daily, we're front running the golden pocket. If we come down and bounce from the golden pocket, we're front running that liquidity that was just below at 100.5, which is a little bit lower. So the big thing is between the golden pocket and the 786 is where, coming down to 100.1, we might see a bounce from that area, but we really want to hold our golden pocket in order to, get a continued rise. We also have to watch for that 3-wave corrective move. If we get a bigger 3-wave corrective move and start to really reject from our area of resistance above that I marked out earlier in the video, that could be a nice signal that we are going to continue pushing down to make new lows. And that, honestly, guys, is about it. You know, yesterday in the live stream, we talked in depth. If you guys want to go watch that live stream, we talked in depth about really the high time frame bearish signals that we were seeing on the chart, and that those bearish signals were really giving us some caution that we might see a bigger dump to the downside. You know, on the weekly time frame, we have a triple drive of weekly bearish div with money flow draining out as the range formed, or as our final range formed on the daily time frame. You can see we have the triple drive of bear div on NAMI, as well as the money flow bear divs on the weekly as well, and actually a triple drive of money flow bear divs. You can see from the 108K highs to the 123 to the 126, we have that bear div on money flow as well as momentum. So we had a lot of technical signals that were showing that we could get this dump to sub 100K, and that is in progress right now. Now, for me, I'll really start to get more bearish if we close our weekly candle below this anchored VWAP, because we haven't closed the weekly candle below the anchored VWAP yet. Let me go ahead and hide this anchored VWAP so you don't get confused here. But if we're looking at our anchored VWAP from the 74K lows, you can see this is our first weekly candle below that anchored VWAP. We did get a wick below it before, but that was a couple weeks ago when we were first testing it during that crash. And if we close this weekly candle below it, it could signal more downside. That is honestly about it for Bitcoin. Now, guys, I want to cover the total market cap. I'll cover some of the altcoins as well. Some of the altcoins are, you know, bounced from key support yesterday. But before I cover that, I want to talk about the partners of the channel, and I want to talk about a new campaign, a new trading competition I'm doing with BYDFI. So first off, BYDFI is the main partner of the channel. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much you trade in the futures markets, depending on how much volume you move throughout your trading. And they're offering some of the best initial deposit bonuses in the game. If you deposit just $100, you can get a 50% deposit bonus, which is the highest I've seen for a $100 deposit. And then they're offering various 20 and 10% deposit bonuses depending on these amounts that you deposit in here. And I have partnered with BYDFI to create a Telegram community where I do post my analysis and my trade setups. You often hear me in these videos talking about how you posted it in the Telegram. And if you want to get access to those posts and the trade setups, the Telegram community is free. All you do need to do in order to get in is sign up with my affiliate link and deposit $100 into the exchange. You'll get the discounts on the trading fees. You'll get the $50 deposit bonus, and that $100 is still your money to trade with. And then once you've deposited the money in the exchange, you can go ahead and click the Telegram link in the description of this video. Once you're in the Telegram channel, type in /verify and then your user ID, which will probably be a string of letters and numbers right next to your little icon here. And that'll get you access to that Telegram community. And once you're in, you're in. Now, I want to talk about today, November 5th, we are starting a trading competition with BYDFI in celebration of really me hitting 3,000 subscribers on YouTube. BYDFI has partnered with me for this trading competition. Really cool competition. I really appreciate these guys doing this for me. So the competition, they've put $2,000 right now into a prize pool, and they're also giving away some Samsung earbuds here, random to one of the random traders. And if you do want to sign up for this competition, we are going to be offering, so I posted this in the Telegram as well, but from November 5th to December 5th, BYDFI is going to give us $2,000 as initial prize pool. And for every 1 million traded in volume, the pool, BYDFI will add $100 to the pool. So it go from 2,000 to 2,100 to 2,200. After the campaign ends, the top 5 traders will get 80% of the prize pool, and the 20% will randomly get airdropped among 20 other traded members. And then also they're also going to randomly give out those Samsung earbuds, randomly select someone for those Samsung earbuds, which is a $330 value. So if you're interested, the link I will post into the description of this video, and just click on the link for the BYDFI competition, register in the competition. You can see we've already got some people here registered in the competition. And I think it's a great way to, promote trading, promote the exchange, but also it's a great way for you guys to learn and to kind of compare yourselves to, I don't want to say compare yourselves, kind of measure up to if you're using proper risk and proper trading protocols, risk management protocols. So there you guys go. That is that. The second partner of the channel is NAMI Trading. NAMI is this momentum and money flow indicator that I use for entry and exit confirmations. You can also see I use it to get an overall bias and sentiment on the market. Like with what we're seeing on these weekly bear divs, I knew that a bigger correction was coming soon. And if you're interested in purchasing NAMI, the link is in the description, and they are offering a 50% discount code if you use my affiliate link. Divine50 is that discount code. I do not know how long that discount code is going to be running, so if you're interested in getting it, I suggest you get it while that discount code is still available. And then lastly, the last two partners of the channel are Bybit and MEXC, both great exchanges. They're offering discounts on trading fees, futures trading volume bonuses, depending on how much you trade, and some really good initial deposit bonuses, 10% initial deposit bonuses as well. So that's just a great way to help out the channel. Do appreciate you guys helping me in any way you can. Also, just hitting a like on this video, sharing this video with your friends and family. I would really appreciate that. It helps the channel grow. And let's get back to the TA here. So I'm going to go ahead now and go into our total market cap chart. Now, in yesterday's live stream, I talked about this key support that we were dropping into. As we were dropping yesterday, a lot of people were looking to knife catch longs, and I just cautioned against it because our total market cap had not come down to support yet. We were in this general area here. And a lot of people were asking, hey, is it time to long yet? And I said, for me, no, because we're not seeing the bull divs on the chart. And we also are not hitting support levels on either Bitcoin or total market cap. So I use the total market cap as kind of confluence for trading Bitcoin. If I see the total market cap is still up in this kind of no man's land up here, and Bitcoin is not quite to its support level, or if Bitcoin's at like a mini support level, like that 101 daily level, but the total market cap hasn't dropped to support, then I'm going to say, hey, maybe the total market cap is going to keep dropping until it actually hits a real support level. That means that Bitcoin and the altcoins could continue dropping here. I'm going to hold off on a trade until I see confluence of total market cap hitting support as well as Bitcoin. In yesterday's live stream, I talked about it's highly probable that we were going to come SFP, the crash lows, into our pitchfork band, our lower band, pitchfork lower band, and it was also the value area low of our range for all of 2025. You can see this goes back to December of 2024. This is our range for all of 2025 of the total market cap. And our value area low, we didn't quite actually hit the value area low, but it's because we're bouncing directly from our pitchfork band after grabbing the liquidity from the crash lows, from anyone that longed the crash lows. So very nice bounce from this an expected bounce that I laid out ahead of time. And we're seeing that bounce, with that Bitcoin, some of the altcoins are getting some small relief rallies. But once again, guys, I do think that it is possible that the total market cap keeps dropping, and maybe even if it's going to drop a little bit lower to actually hit that value area low and then get an instant reclaim of that pitchfork band, and or even a sweep down to the lower part of the pitchfork band and then an instant reclaim of the value area low is something that I will be watching for in the next days to weeks here. But I just wanted to highlight total market cap did get that drop exactly to the support level we were looking at in the stream before it happened yesterday. All right, moving on to some of the altcoins here. On Ethereum. Now, guys, if you were not live with me in the live stream yesterday, Ethereum hit a very, very key golden pocket. Actually, let me go on to this Ethereum chart. Ethereum hit a very key golden pocket that we were expecting a bounce from this golden pocket, but we were also expecting that it would give us, we knew that it would give us an invalidation of our 5-wave impulse that we've been looking at for the past really 3-4 months here. If we turn on, let me go real quick to the other Ethereum chart. We were looking at this 5-wave impulse up to make new all-time highs from the lows that we saw here, from our lows. We were looking at a 5-wave impulse to make new all-time highs, potentially into like $5,900 to $6,000 for Ethereum to kind of top out around that $6,000 mark for this bull market. But after rejecting from the top of our pitchfork, we wanted to see a 3-wave corrective move, either down to that 0.5 Fibonacci, which was also the back test of your 4-year long range value area high, or we wanted to see it between the 382 and the 0.5. But if we did come down to hit your golden pocket that was pulled from the lows of wave 2 to the highs of wave 3, that is an invalidation for this impulse to the upside. If your 4th wave corrective move comes down to hit the wave 3 golden pocket, it invalidates the impulse to the upside. We have now officially invalidated this impulse, so we can take this off the chart now and expect that this is not going to play out anymore. It's really a big bummer because we did have a nice bounce on the crash lows exactly from that $3,500 mark. And during this range, we were looking just to get an SFP of that crash low into our weekly. I talked about that really the last 2 weeks during the live streams and the videos. But unfortunately, we broke our little range of the last couple of weeks down, and we came down and we hit that golden pocket. Now, that golden pocket was really nice support that even in yesterday's live stream, before we came down to that support level, I was saying I do expect some sort of bounce here. If we go on to our Bybit chart, you can see our range for all of 2025, or actually, excuse me, going back to March of 2024. So almost 2 years, 3 months under 2 years, 4 months under 2 years. You can see that the value area high back, the bullish back test of the value area high, since we've broken out of that value area high in middle of July, we have not back tested it yet to confirm a flip to support. So it was the value area high bullish back test of an almost 2-year long range. It was our anchored VWAP from our $1,400 lows. It was also our golden pocket of that wave 3 push up, or that last big impulse to the upside. And it was, most importantly for me, the pitchfork midline of our pitchfork, because when we did reject the last time from the pitchfork band, we now, as a pitchfork trader, can expect a move down to your next major pitchfork support level. So we are getting that bounce from our pitchfork midline. We are getting a bounce from this support level that we laid out in yesterday's live stream before it happened. And actually, we've had this box marked out for a couple weeks. We just really didn't want to see us come down there. But now we have to say, because we've hit this, we could be expecting a lower high on the charts before continuing to push lower here. And it's really unfortunate to see this, but that's kind of what I'm looking at for Ethereum. We also have a range. We have kind of this upper range that we can measure here. And you can see the back test of our large range value, much larger range value area high is going to be coming in. Our, almost 2-year long range value area high is going to be coming in around the value area low of our range that goes back to the middle of July. So that is going to be a key resistance, a volume resistance level for us. You could see we would also fill in that fair value gap that was created over the weekend on Monday's drop to the downside. And if we pull our Fibonacci golden pocket from the highs to the lows here, you can see that that golden pocket is coming in our last kind of daily high to the low that we made yesterday. That golden pocket is going to be coming in at that general area. So for me, this is going to be a major resistance that Ethereum has to get back above if we want to see overall bullish sentiment change. That's going to be between 3,800 and 3,869. Let's say that 3,800 to 3,869. That is going to be golden pocket slash golden pocket, value area high of our 2-year long range, value area high of our 3-month long range. And yeah, that is that there. I believe there was also, let me put this back down there. And we do have a daily level that's just above it. We have that daily level. Let me go ahead and, okay, this is not the, I need to go to this one. And yeah, and we also have the pitchfork band up there. So pitchfork band, let's go ahead and mark it out on this chart. This is my main chart where I keep the object tree. So we'll go ahead, throw that golden pocket on. You can see that golden pocket is going to be in perfect confluence with the top of the pitchfork band. It is going to be our value area high. And we also have, let me just put that there. We also have our anchored VWAP coming in from our all-time highs coming in there. Anchored VWAP from the all-time highs. So once again, just that general area between 3,800 and let's say 3,860, 3,868 or 3,860. Big volume level of resistance that we need to get above. Volume and golden pocket resistance. Now, you can see on the Coinbase chart, the value area high of our 4-year long range that goes back to May of 2021. Now that we are back underneath the value area high of our 4-year long range, we could consider this entire range that formed the last 3 months above it to be a failed auction, a high time frame failed auction breakout of a 4-year long range. And if we start to close weekly candles back inside of this volume profile, we could see Ethereum drop quite drastically here. And unfortunately, now that value area high is going to be acting as a local resistance. That value area high is going to be coming in right around 3,600, where the lower part of our pitchfork band is. So just based off of the 4-year long value area high and the lower part of the pitchfork band, I am going to be considering that in a resistance level as well. We would also fill in a little bit of a daily fair value gap that was created from Tuesday there from yesterday. And if we zoom in onto the hourly chart, let's just go ahead and pull this all the way. We'll check out our naked daily points of control here. Naked daily point of control is a little bit below that. At about 3,500. That was for Monday. And then below us, that just confirmed about 30 minutes ago, we do have a fresh naked daily point of control. That is going to be coming in right around 33.34. But this is guys, Ethereum, unfortunately, I do expect some sort of bounce from this golden pocket and from the pitchfork midline. Of this pitchfork is a different pitchfork, but it's a very highly relevant pitchfork. But I just don't see us that being the overall low. Could we bounce all the way up to 3,800 from that? Absolutely, we could. As far as our impulse to the downside from last Sunday, October 26th, from a couple weeks ago, we were looking yesterday in the live stream. Let me just zoom out to the 4-hour chart here. In the live stream yesterday, we were looking at this being a potential 5-wave impulse to the downside. And we were looking at this being your wave 1, your wave 2. And in yesterday's live stream, you can see I have this 1.618 Fibonacci extinction laid out. Because in a third wave push to the downside, the 1.618 is one of your most common targets for the ending of the third wave and the start of a bounce of a fourth wave. So we now have our third wave target hit, being that 1.618. We could be just rising right now in a fourth wave before seeing one more low be made in a fifth wave to overall end this impulse to the downside of the last couple of weeks. So if we're looking at our local resistances for a potential reversal to move down for a fifth wave to the downside, we can pull that Fibonacci extinction or retracement from the highs of wave 3 to the lows of wave 3. And we want to put on those targets between the 382 and the 0.5. And you can see right now, we're pretty much seeing a rejection from that 0.5 Fibonacci. That to me is telling me that this could be continuing the drop to the downside here to even make one more new low below yesterday's lows. Also, if we look at the money flow looks pretty bearish. No bull divs on the chart. Very, very locally on NAMI, we did see some bull divs on the chart yesterday with markets, with NAMI, and money flow was already curving to the upside. So that was kind of a nice signal to look for a long at this level here. NAMI is a bit quicker than Market Cipher B. And with those 4-hour bull divs and money flow coming to the upside, expecting some sort of bounce from this major support level. Nice little scalp trade there, scalp long opportunity. And now if I did long that, I didn't personally, but if I did long this area here, my targets, my first take profits would be between the 382 and the 0.5. So if you are long for that, I would have already taken 50% out of the trade. And let's zoom out to the daily chart. Now, other than that, guys, I am just watching for Ethereum now to continue to kind of either form a range around this. Let me get rid of that now. Let's hide this for a second. I am expecting Ethereum to kind of form a range, maybe one more little low here and then start to range around this pitchfork midline. But if we start to close daily candles below the pitchfork midline, I mean, we can expect a move down to your point of control of the range. And by the time we get down there, you could be seeing your lower band be in confluence with that point of control. And that is going to be coming in around the $2,500 mark, $2,515, $2,530-ish, depending on what exchange you're looking at. But that, to me, is a real probability, a real possibility, not probability, a real possibility over the next couple of months now that we have invalidated the impulse to the upside, our big weekly impulse to the upside here. Okay, but that's about it for Ethereum. So we have our local levels of resistance above us. We have the resistance coming in around 3,600. We have our resistance between the 3789 to 3862, or like 3800 to 3862. And of course, right now we're at our wave 4 retracement target, and we could roll over right now. That's it for Ethereum. Let's go now on to Solana. Solana, guys, long story short, I'm still expecting some new lows to come in on Solana. You can see we actually bounced right before we hit the point of control of our range. Now, this range goes back, once again, to the March 2024 highs. So Solana was in a very aggressive impulse to the upside in 2024. And then in March of 2024, we started a larger sideways range. And we've been in that range for, going on a year and a half, 2 years now. And within that range, we fell back inside of our volume profile. So I explained this pretty much in depth in yesterday's live stream. So you can go check that out if you want. But a short version of that is we broke out of the value area high of that range. You can see it was resistance, finally flipped it to support in this general area here. And then we broke up to our next big resistance area, which we had a weekly and our macro 786. So from the all-time high down to your $96 lows, your 786 Fibonacci rejected us in confluence with the weekly level. But if what we wanted to see was a back test of that value area high and then new highs being made, holding it as support and new highs being made. But if you fall back underneath that value area high, then you could be looking at, once again, failed auction of the breakout of a 6, 18, 20-month long range. And if you start to break back inside of it, and especially I warned in yesterday's live stream, we were forming this range over the last 2 or 3 weeks underneath that value area high. It's a bad sign, and it's a sign you could be finding reacceptance back within your macro volume profile. And after finding reacceptance back within, we bounce from very, very key support many times. These 2 anchored VWAPs, we really need to hold them, and I've been emphasizing that over the past couple of weeks. Those anchored VWAPs were from the all-time high and from our $96 lows. And so if we wanted to maintain our larger bullish uptrend, then we wanted to bounce, higher highs, higher lows, higher highs, higher lows, higher highs. If we came down to those anchor VWAPs, we wanted to bounce from them, seeing that hold as support and continue making new highs here. But because after coming down to them multiple times, you can see here, acted as support multiple times on the daily time frame, 1, 2, 3, 4, 5 tests. And just like that piece of paper, every time you hit into it, it gets weaker and weaker and weaker. And eventually you break through it. So we wanted to bounce from these anchored VWAPs and get back above the value area high of the range. Flip it to support and continue higher. But we bounced from those anchored VWAPs and we rejected on the bearish backtest of our value area high. Because we rejected on the bearish backtest of our value area high, it was a high probability that we might break this range to the downside and come as low as our point of control. You can see that point of control was front run in yesterday's drop to the downside. We had just barely front run. Our lows were made. Let's throw this on here at 146.4, 146.5, let's say for ease. And just below that, around 145.5 is your point of control, and your pitchfork midline, very, very key pitchfork midline of your bearish pitchfork, is coming in right around that point of control, about 143, 142 to 143. So I do expect that we could continue pushing down just to make one more new low, just like with Bitcoin and Ethereum, one more new low, actually hitting into that point of control in that pitchfork midline. And then we want to see some sort of range forming here, maybe that inverse head and shoulders pattern, or a like sort of smaller accumulation pattern form here. Money flow looks pretty bad, crossing into the red on the daily, and then it's turning down again on the daily time frame on NAMI. There's obviously no bull divs here, no bull divs. So to me, it is likely that Solana does keep dropping to come down to that 145 to about 142 area of support. And then if we can get a bounce from there and start to range, we might be able to get a bigger relief rally. Let's see here. And then, of course, we did break down. Actually, let me just go back to this chart. Let me go ahead and turn on. This is our bigger bearish pitchfork. Look, measuring now a bearish scenario. But if we look at our, didn't mean to do that. If we look at our bullish pitchfork, where is that? We broke it to the downside yesterday. And this is the pitchfork that I've been talking about for months on my channel now, because we were in a bullish trend. And what a pitchfork is doing is it's measuring key levels within a bullish trend. And we rejected from the top. By the way, as we were coming up to the top of this pitchfork, go back and watch my videos and live streams around this time. I was warning of a major reversal from the top of the pitchfork, because we had hit into our weekly and our 786, and we rejected overall. You can see on the daily time frame, we had some wicks above the pitchfork, but really no candle body closes above the top of our pitchfork. After seeing a few rejections at the top of the pitchfork, we had lost it, bounced from the midline, but we were chopping around in your upper band here. And we really suggested that we could see a larger rotation down towards the bottom of the pitchfork. Now, we had that nice three-wave corrective move to our anchored VWAPs. It was also our pitchfork band, our lower pitchfork band, which we were forming that range within. But we lost it yesterday, and you can see very clearly here. Look at that candle. It's not yesterday. The pitchfork band we lost on Monday. But you can see that's where we kind of finally lost, and we saw the big drop. Once we were chopping around the bottom of the pitchfork band and couldn't really get back within it, we saw that big drop on Monday and lost our pitchfork. And so because we're losing our bullish trend, we can expect to come down to next major support level. And so that's what I'm looking for on Solana, really just to come down to that 145 to 142 level. Of course, we did just now confirm a new daily support on Solana at 150. Let's say, just say 155. It's 154.99. So 155. We just confirmed a new daily support level. And if we zoom in on some of the lower time frames, if we go on the hourly chart, we can look at. Let me just throw that there. We'll just get rid of that for a second. Our naked daily point of control that just closed about 30 minutes ago, 40 minutes ago. Okay, naked daily point of control is going to be coming in around 157. And I don't really like that lack of confluence there. I would like to see more confluence between that naked daily and that daily level. So we'll throw that on the chart though. And then, of course, we can always look at our golden pocket pulled from yesterday's lows to the highs that we made today. And that is going to be below even more. Yeah. 0.5 Fibonacci is going to be right on top of that daily. So I would say if Solana is going to come down between this naked daily and the daily level where your 0.5 Fibonacci is, that is sort of a internal support level. but I wouldn't be expecting much from it. If we bounce, we might get that 3-wave corrective move and a bigger 3-wave corrective move in here, maybe to come back test the pitchfork before coming down to 145. So that is something we could be watching, and I'll cover that with you guys. If you guys have questions on that, you can ask in the Telegram. I'll try to post updates on that in the Telegram. It would also, if we did see a larger 3-wave corrective move, bouncing from the daily in the 0.5 and then coming up to bearishly backtest that pitchfork breakdown, it would sweep all this liquidity in here. So you can see that high of that kind of exhaustive channel that we saw down the last couple of days. It would sweep all the liquidity from this descending channel into your bearish backtest of the pitchfork around 172.8. 171 to 172.8. And that could be a major area where we do see then continuation to the downside. I'm not even saying we're going to make it up there, but if we do, that's going to be a major level where I'll be looking for potential short trades. Okay. And then really, other than that, guys, if we get back above, like there's a potential we could also come down to the POC first and then form a range around this POC and then get the push up. And if we get that push up a few weeks later, coming in middle of November, a couple weeks later, these anchored VWAPs are also going to be in confluence with the back test. And our value area low of our range that we broke down is also going to be in confluence with the back test. Now, that would be a bit higher because this is a dynamic resistance that gets higher with time. And we'll look at that scenario. If we do form the range for a couple of weeks around the POC and then get a push up, I still will be looking at that 178 level as a potential resistance level. That is honestly about it for Solana. Now let's go ahead and move on to SUI. SUI, guys, SUI is bouncing, and we showed this in yesterday's live stream, but we were looking at the bearish pitchfork here. Now, I had a different bearish pitchfork on the chart, so let me turn off the one we created in yesterday's live stream, and we're going to look at this bearish pitchfork. This is the one that I had on my chart for the last few months. When I've been doing videos and live streams the last few months, we've been looking at this bearish pitchfork. And remember, we were chopping around in the band, and once we lost the band and lost the value area low of our range here, we were expecting a move down. Well, first of all, during the crash, we did move down, and we bounced from the midline. Let me just hide this. I was looking at some potential scalp short earlier today, so that's that. But we bounced from the pitchfork midline. We got the dead cat bounce and formed a range after getting the bounce from our pitchfork midline during the crash. We formed a range within our pitchfork band, but we started to lose it, and we came down again to our pitchfork midline. And you can see we wick past it a little bit, but no daily candle closes below it. But one thing that I like to say is with this pitchfork, I had this pitchfork on my chart before this high was made. That's how long I've had the pitchfork on the chart. I really had it on the chart since May, since we made that high in May and started dumping. So maybe a week after May, I put this pitchfork on the chart. But because this high here is a higher high, we could look at another bearish pitchfork. And that is the pitchfork that I pulled in yesterday's live stream, which is the same two pivots from your high to your low. But instead of going to this high here, we're moving it to the actual high of the range. And so of this range in here that we were forming. And so if we look at that pitchfork, I'll hide now the first pitchfork, and we look at this pitchfork, and this pitchfork also has very, very good respect on it. You can see actually even better respect than the prior pitchfork. The upper band acted as support for months during this upper range here. Acted as support for months. And once we lost that upper band, we saw the quick flush during the crash. And then we got the dead cat bounce, and our midline, our pitchfork midline, was holding as support the last couple of weeks. Every time we came down to it, we saw some wickage past it, but on the daily time frame, really no daily candle body closes below it. But then what happened over the last few days here? Last Sunday, we lost it during last week, last Thursday. We came up and we back tested it last Sunday. And that's when we rejected on the bearish backtest. We dropped exactly. I mean, guys, this is so perfect. Look how good pitchforks are. We bounced perfectly from our pitchfork band of support. So, and we had this marked out, by the way. We talked about this in the live stream before it happened. If you go watch yesterday's live stream in Sui, you will see that we really did look at this before and look at bouncing from this level before. But look at how nice this is. You know, we were chopping around. The midline was holding a support here. And then once we lost it last Wednesday, Thursday, came up, back test, back test, back test, back test, 4 back tests on lower time frames. Couldn't get back above it. That's when you see your next major waterfall dump to your next major pitchfork support. So we are bouncing. We're seeing a bounce directly from our lower band of the pitchfork. But here's the thing, guys. I still don't see the bull divs, and money flow still looks really bearish. Actually, on the high we're printing right now, today's high, we're printing a 4-hour hidden bear div on NAMI, which does suggest continuation to the downside. We also have to look at this being a potential impulse, just like with Bitcoin, just like with Solana, a potential impulse to come down to the bottom of the pitchfork band. Now, this is a major, major level. At the bottom of the pitchfork band is a large liquidity level, a very large liquidity level, 171.6, I'm going to say, 171.5, 171.6. Seeing one more low be made, finishing this impulse to the downside, a 1, 2, 3, 4, 5, and finishing this 5-wave impulse to the downside, grabbing the liquidity from a very big impulsive move up, and then into the bottom of your lower band, that to me could be a very, very strong swing long position. So I'm going to actually set an alert here, and we'll do SFP swing long, a potential swing long. Now, as we're coming down to SFP, that I want to see some bull divs on the chart, at least 4-hour, 2-hour, 1-hour bull divs. So what we can see is this. A move down here, SFP, and between the low we made yesterday and the new low that might be made in a week maybe, I want to see some bull divs on the chart, and I want to see the money flow starting to bottom out and rise to the upside. On NAMI, because NAMI is quicker, we're probably going to see multiple drives of bull div, and the money flow is probably just going to be crossing into the green as we come down there, with NAMI being quicker. And so that's what I'm going to be looking for. But that level of 171.5 is going to be a very key level to look for a long position for me. Now, if we do not SFP that low into your pitchfork band, I think we could drop to the bottom of the pitchfork. And that is a harsh move, but we could absolutely drop to the bottom of the pitchfork, which could be, depending on time, between 140 and 135. And if we do drop to the bottom of the pitchfork, I still will be looking for longs down in that area. But I would want to see some confirmation if we're coming down there. As far as our levels, let's see. We've broken our naked monthly point of control. We can get rid of that. Actually, that might be just from a couple days ago. Let me double check this. Yeah, never mind. We broke it a couple weeks ago during the crash. And of course, you can see on the crash yesterday, the candle body close on the daily time frame was at a key naked weekly point of control. We wicked past it to hit our pitchfork band, but the candle body closed at a key naked weekly point of control. So we are bouncing not at random levels. We're bouncing exactly at very key levels in the market. I'm going to delete that now because now we've hit into it. And then let's look at monthly levels. Okay, weeklies. And then, of course, we had the weekly down here that we were bouncing from. So I'll delete that now as well because we're bouncing from that. But yeah, as far as the main trading style I have, guys, with the pitchforks, we lost the pitchfork midline. We barely backtested it on Sunday. We've now dropped to the pitchfork band, but I want to see one more low being made to grab the liquidity into the lower part of the band. It doesn't mean we're going to get it. If we do start to impulse up from here, I will be looking at the back test, the bearish back test of the value area low in confluence with that pitchfork midline. Now, we can also pull our Fibonacci from the highs of the dead cat bounce to our lows that we just made. Our 0.5 Fibonacci is going to be right around that area. And then actually what I would do is I would pull it of this impulse. So I'd go from the rejection last Monday and I would look at that golden pocket, which is going to be in the same area. Same area. So a lot of confluence of resistance in this general area here. We have our larger 0.5. We have our golden pocket of the last daily push down. And we have pitchfork midline. And the bearish backtest of the value area low after you lost your large range value area low. Now, if we do get a push up there, I'll be looking for a 3-wave corrective move as we're coming up there. If it's a 3-wave corrective move, I will look for another drop down. And if we can reclaim it and reclaim our value area low, that's when we could really start to be in business here. You can see we do have a fresh daily level of resistance that's also at that area. So more confluence, that daily level coming in at 237, right on top of that golden pocket and right on top of that. So that's definitely going to be a shorting opportunity, a resistance shorting opportunity for me, especially if we bounce before taking out the liquidity. Now, if we come down and take out the liquidity first, that golden pocket is going to change, and we're going to have to redo our TA here, still see if this level has proper confluence, because also the pitchfork midline would be getting lower and lower. But if we bounce right now and see a 3-wave corrective move up there, that will be a short for me. Okay, that's it for SUI. Let's go ahead and move on to SAY real quick. Guys, SAY lost the pitchfork midline. You can see we rejected the upper band multiple times. We rejected the lower part of the upper band, and we chopped around and formed a range around our pitchfork midline, but we rejected multiple times. We saw those, oftentimes you'll see those 3 rejections. After the 3rd rejection, you generally tend to drop. And so what I'm looking for now on SUI is, honestly, we did SFP our internal lows, which was nice. You can see that nice SFP on the daily time frame, a daily SFP of the internal lows there. But I mean, I think we could continue pushing down into the bearish pitchfork band around 13.8, 13.7, maybe even down to like 12 cents. And if we do come down in SFP our lows from mid-April, we could be SFPing the lows into that pitchfork band. So we might see a bounce here to backtest that value area low of the range that we broke down, and then we might kind of come down and grind here and see that SFP. That's the next major level. Remember, most important levels on the charts are liquidity levels, followed by volume levels. So that's kind of what I'm looking for here on SAY. Of course, we did just form a new daily support level, and we do have a, let me just hide this real quick. No, that's not a daily there. Okay. Let me just check one thing here. We could be looking at this push down. Did we bounce from the 1.618? Yes, we did. Okay. So because we came down from last Sunday, October 26th, on Sunday, October 26th, a lot of coins made highs into their value area high of the range. And we rejected that value area high. Since then, we see a potential 1, 2, 3 bouncing from your 1.618. Now we could look for a 4th wave before seeing one more 5th wave to come down to that pitchfork band. So what I'm going to do here is I'm going to pull that Fibonacci retracement from the highs of wave 3 to the lows of wave 3. And we're going to look at our wave 4 targets. And sure enough, where are we rejecting today, right now, from your 0.382 target. So this could be the high for the day, and we could start to roll over right now and come down to that low. Or we could see a 3-wave corrective move where we come up to that 0.5, reject it, and then see that 5th wave. But overall, we are rejecting from local resistance on SAY. And honestly, I expect new lows. Money flow here on the 4-hour time frame is starting to come out again. And we did just print a hidden bear div on today's high. So yeah, I'm expecting new lows to finish this impulse to the downside here. Coming down to your major pitchfork level. Okay, let's go on to XRP real quick. XRP. Now, XRP did come down, and we bounced from our golden pocket that was at the bottom of our descending channel, our big descending channel. So This descending channel we've had on the chart for quite a while. And unfortunately, this does look like impulsive move to the downside as well. A wave 1, a wave 2, wave 3. We could be in a wave 4 before seeing one more push down to actually hit into the value area low of your large range. This range goes back to the beginning of December. And so what we're looking at here, I just want to look at this real quick. Did we hit the 1.618 Fibonacci extinction? Yes, we did. That's where we bounced from. You can see that 1.618 Fibonacci extinction in confluence with your large golden pocket. And then, of course, the 4-hour candle closed at the bottom of our channel. So we're still trending within the channel. Now, on the move up, let me get rid of this. This was a support level that got busted through. But on the move up, you can see now our large range point of control and our 3-week long point of control is going to be coming in right around your channel midline. That, for me, will be an area where we could reject. Now, unfortunately, that would invalidate the impulse to the downside. Let's pull this wave 4 targets. Okay, we might have already invalidated that. Yeah, we've hit that golden pocket. So we're coming up to a local golden pocket right now. Let's get rid of that. Coming up to a local golden pocket, you can see we've tapped it. So now we cannot say that this is a 1, 2, 3, 4, 5. Right now, we're going to say that this could be still a double zigzag or a larger, WXYXZ. But I still expect that we could reject from this general area coming up here to around 241.5 to, like 239. Or even where we're at right now. And let me just do one more thing. Let's pull the golden pocket from the highs to the lows. Okay, that's a little bit higher. Okay. We do have a new daily support level, just like many of the coins formed a daily support level with a bounce today. But other than that, guys, I mean, if we can get above these point of controls at like 240, 241, then I do think we're going to see a bigger push up. And if we get that bigger push up, we do have the daily level of resistance near the value area high. You can see that daily there. And then our golden pocket is going to be close by that. Nope. Not quite. 786 value area high and daily. So that would be the next area of resistance. This here. First area of resistance is going to be the 2 points of controls, large range, small range point of control in confluence with our channel midline. Let's just take this, move this over a bit. And actually, we're going to pull that golden pocket again, and I'm going to include that golden pocket within it. Okay, that is honestly about it for XRP. I do think based off of, we were seeing some bull divs as we were coming into this golden pocket, but we did front run the value area low. And to me, the front run of that value area low down there is a bit concerning. If we look at some of our levels, let's go ahead. Monthly levels, none. Weekly levels, none. Yeah, and then that naked daily point of control is right up there as well. Let's make sure that is a fresh one. No, it is not. I've got that on the monthly. Hold on here. That is a fresh naked daily point of control. So yeah, we also have our fresh naked daily point of control in that area at 241, 240. Okay, so that is our resistances for XRP. We're coming up into a resistance right now between 238 to 241.5. If we get above that, I expect us to move up to our next box of resistance between 252.6 and 256.2. And then if we get above that, we'll go from there. That's it for XRP. Lastly, let's go on to Chainlink. Now, guys, Chainlink came down, and we were covering Chainlink in depth in yesterday's live stream. Chainlink came down to our key support level that I've been talking about for literally weeks on this channel. Very, very perfectly hit into our point of control of our range in confluence with the bottom of the pitchfork. So I just want to zoom out onto the daily and show you how nice these pitchforks are. I mean, the last two times we hit into the bottom of the pitchfork, we got major rallies. Major rally, had a correction, major rally again. And now, after rejecting, we were forming the last couple of weeks here. And if you go watch my videos for the last couple of weeks, I talked about in every video how we were forming this triangle within our pitchfork band. And on these high time frame pitchfork bands, you often form ranges inside and around these pitchfork bands. That's what we were doing. You can see what happened. We lost the pitchfork band. We back tested it. And once we rejected on Monday, even after Monday's candle close here, I said it's highly likely all week long. I was saying it's highly likely we do come down to that 14.3 to about 13.8 level of support. We are bouncing. We're seeing a nice bounce from the bottom of the pitchfork here. But I'm still a little bit hesitant. Someone in the Telegram just asked me if I bought some spot on Chainlink yet. And I said, no, not yet. I actually want to see a little bit of some support hold in here for a bit. And if we start to range around this POC and around the bottom of the pitchfork, then I'll look to buy. But for a spot buy for me, I want to see some daily bull dips. And I'm not seeing daily bull dips here. So haven't taken it yet. And then if you go back and watch yesterday's live stream on Chainlink, I said if we lose this pitchfork, just like with Solana Bitcoin, when we lost their bullish pitchfork structures, you can see a big breakdown. And if we lose this pitchfork support and POC support that we're at right now, I expect that we could drop all the way down to $10 to like our macro golden pocket. So I'm not going to go super into depth on this golden pocket, but that golden pocket is literally pulled from your bear market lows to your cycle highs of this cycle. And in April, this drop we saw for 4 or 5 months into April, we had front run. You could see right here on that low. Let me just get rid of those drawings. We had front run it. We did not tap the golden pocket. We also did not take our liquidity right before this aggressive impulse up. So seeing a sweep of our two lower highs into our macro logarithmic golden pocket and taking the liquidity of last November's low and April's lows into that golden pocket. To me, that is such a strong level of support that I will be heavily buying spot if we get down to that level. So let me just zoom out onto the weekly time frame. That is going to be around 992 to 935. And for me, that is going to be a major level where we could look for some nice spot buying opportunities. I will talk about another bearish pitchfork that we have on the charts in a different video. But if we really are going to go into a bear market and this was a lower high, we could be coming all the way back down and forming a lower low and it's kind of starting another accumulation range back down here again, just like this one. And that is something that we do have to worry about if the bear market's about to start here. But I'll cover that when the time comes. If the time comes, if we lose this pitchfork. But for now, that's it for the video. Please like the video. Please subscribe to the channel. I will be live tomorrow. I'm going to go live at 2 p.m. Eastern Standard Time, not 3 p.m. Eastern Standard Time. So I hope you'll join me there. Bring some altcoins you guys are interested in. I will try to cover as many altcoins as I can. We can try to get into some live trades during the stream, and we'll also just take a look at Bitcoin and the total market caps. So thank you so much for being here. I will see you tomorrow.